Thank you very much. Thank you to join this very exciting panel. Just heard Gabriel's panel about how the payment company, the Web3 native payment company are trying to capture this new initiative or new opportunity. I always hear that in Web3 space, we talk about where can we get the next 1 billion new users. I think this is a hot topic. But at the end, today we are trying to tackle this problem in another angle. We are very honored to invite two very traditional banks who are going into Web3 payment space. And also, when we are talking about banking industry, we obviously need to touch a point on the regulation. So we have a partner from law firm. So I will leave to all the guests who has a very long CV to introduce themselves first. Maybe start with Siri.
Hello, afternoon, everyone. I'm Sari Dwin. Everybody calls me Sari for short. So I'm the CEO of DCS in North. If you have heard earlier on, our chairman, Charles Huang, actually did a short presentation of who DCS Card Center is. So DCS Card Center, just to share with everyone, is a 50-year-old financial institution. So in Singapore, we have had the license under Banking Act to issue credit and charge cards for the last 50 years. In the last 3 years, when the company was newly acquired, we actually did a very big business transformation. So now, on top of just issuing cards, we also do merchant acquiring. Additionally, where I sit under DCS in North, I actually lead all the new revenue streams for DCS Card Center. So basically, my main purview will be exactly what Mr. Huang has shared earlier on. So I started the tokens project in DCS Card Center. So right now, we are very proudly the first financial institution to actually launch the digital payment tokens in Singapore under the Banking Act. So I think right now we are very much looking into partnerships, especially even with Banking Circle, for instance, to see how we can accelerate the bank's engagement in driving the Web3 interaction. Over to you.
Hi, everyone. I'm Daniel. I'm head of Web3 for Banking Circle. So we are a bank based in Europe, where we have our licenses in Luxembourg, and we also supervise as branches by FCA in the UK, BaFin in Germany, and also the Danish FSA. So in my role as head of Web3, things that we'll do is that we'll help those corporates that want to issue tokenized deposits, and we also help stablecoin issuers that wants to have very secure reserve management, where we set up bankruptcy remote structures to help stablecoin issuers hold those reserves. So besides being head of Web3 in Banking Circle, I sit on the board of director of a crypto exchange, CoinsUtrust, which is licensed in Switzerland and also in Canada. I also am an advisor to one of the largest stablecoin in Europe, Anchor Coins. And I'm also an advisor in TechStorm TV, which is an esports media company. So prior to joining Banking Circle, I was with DBS for 22 years, where my last role was I set up the DBS Digital Exchange, which is a crypto exchange and also a security token exchange. And then on the ESG side, previously what I was part of a team that set up Climate Impact Exchange.
Hi everyone, good afternoon. And this is Lawrence. I'm a partner at Fana Partners. I'm a PRC lawyer, New York lawyer, and also Hong Kong lawyer. I've been practicing banking law for 20 years. More recently, I focused on token-related law practice. I participated in a variety of token technology-based projects. I'm here to try to help those token practitioners to do their business more legally and try to make money at the same time. Okay.
Yeah, that's very interesting that you can see the combination of Web3 and Web2 in the panel. And that's also one of the reasons why I say we are trying to tackle the next 1 billion user topic from another angle, because the so-called Web3 new users is actually the old users of the traditional banks. So they have all the users. So my first question to Suri is about you got the banking license for 50 years already. What driver behind you going into the token issuance space? Because I'm sure there are a lot of challenges at the back. Can you share a little bit on that?
Definitely a lot of challenges. So just to share a little bit of the timeline, we started discussions with MAS on our initiative of wanting to issue a payment token back in late 2021. We spent about 7 to 8 months going back and forth, explaining to MAS what is the digital payment token, why we are not a stable coin, how are we exactly issuing payment tokens. So 8 months on, we very quickly went into being able to issue our tokens, being able to mint, redeem, and then essentially be able to operate the entire token life cycle. This isn't possible unless we took the path of partnerships. I think why we took the path of partnerships, because we are very clear that we are Web 2, right? For the last 50 years, we do Web 2 very well. So we issue credit cards, we do merchant acquiring. Suddenly to look at Web 3, if we want to do it well, looking at the compliance structures, looking at the custodial, if we did not do partnerships, we will not be able to launch our tokens within just 1 whole year. So 6 months spending our time interacting with MAS, and within 6 months, we actually launched our payment tokens. So I think the challenges that we actually face very much is in terms of, when we think about risk and compliance, payments, risk and compliance, everybody is very familiar. And then we say, it's okay, Web 2 going to Web 3, use the same Web 2 compliance, go into Web 3, should be easy, right? So I think what we realized was when we got into issuing our tokens, and we got our partner Plaid to be actually our partner to be able to come up with the end-to-end minting, end-to-end securing, and end-to-end burning of the tokens. We just realized a very simple thing called KYT. Sometimes people call it KYW. So basically, I think what we realized was it was really a whole web of understanding the risk and compliance inside Web 3. And I think it also daunted on us that even MAS, sometimes when we discuss with MAS on what we intend to do, their knowledge is also very Web 2 biased, right? So some questions that they ask in terms of, okay, so you're Web 2, now you're going to Web 3, how are you exactly complying with Web 3 compliance and regulations? So I think that's our challenge. When we represent a Web 2 organization going to Web 3, the challenges that we face from the regulators are very, very different. So they look at us with a Web 2 pair of eyes to expect us to be able to elevate the amount of compliance and regulatory controls when actually Web 3, based on the native nature, right, of Web 3, they actually come off a very less regulated, less compliant kind of a background. So I think that's the main challenge I saw in the last 6 months when we first wanted to launch our payment token. So I think since then, the last 6 months, through the interaction with partners, I think what we have learned very quickly is that the compliance on Web 2 and Web 3, a lot of discussions, even from a global perspective, right? Even I think we have attended a few of network sessions, is how do you actually bring Web 3 into Web 2 and yet trying to keep some level of the anonymous nature of Web 3, but yet still balance it with the Web 2 requirements. I think travel rule was spoken about very, very often. I think that's the minimum expectations, right, minimally. So I think that's our challenge. When Web 2 practitioners go into Web 3, regulators are very hard on Web 2 companies like us. They really expect not 100%, but maybe at least a 95% understanding, and then it actually impose on us. So I think that's the main challenge I realized.
Yeah, apart from the challenge that I heard, actually there was an upside. You can get the approval in 6 months, 8 months. That's quite fast, extremely fast, I would say. I think the reason is because they have natural trust from the regulator, because you are holding the most compliant license in the world, right? Banking license is the most compliant license. So you naturally get the trust, although you receive a lot of challenge, but that's much less than the crypto native company trying to get the same license, I suppose. So I think this is an amazing experience. And at the same time, because next question I would go to Daniel, because Daniel, your bank is actually from Europe. Europe is obviously the pioneer in the crypto regulation. Like the MiCA regulation is going to launch effective in June this year. So how do you foresee this competitive landscape after this law get effective?
Okay, so MiCA will come live 1st of July, right? So I think MiCA at this point in time is one of the most comprehensive legislation covering stablecoins, crypto assets globally, right? So a lot of places you still have regulations, but they're still on consultation basis for stablecoins, etc. But for MiCA, you actually have a full legislation that's going to come on live, right? But what will happen if you tell me, if you ask me to predict on 1st of July, right? So like, at this moment, you can already see some exchanges delisting stablecoins from their listing pairs, because the concern is, what if it comes 1st of July and those coins are not MiCA compliant, right? So within MiCA, they have actually looked at stablecoins in two types. You have asset reference token, which are basically stablecoins that can be backed by anything, can be backed by algorithm, can be backed by commodities, a basket of currencies, and they look at single currency stablecoins, which they call e-money tokens. So a lot of stablecoins that we are used to, single currency ones, they would be regulated as e-money tokens under MiCA, and that will come live as of 1st of July. So in those cases, you, as a virtual asset service provider in Europe, you cannot issue them. Because a virtual asset service provider in Europe can only issue an asset reference token. So at this point in time, in order for you to be able to be an issuer, at the minimum, you need to be an EMI, electronic money institution. And an EMI will need to be backed by a bank to hold the reserve. So you need a reserve bank and an EMI, or you be a bank. So a bank like ourselves, or in Europe's legal language, a credit institution, we are able to actually issue a stable coin. That is possible. And EMI, on the other hand, when they issue a stable coin, the fiat has to be kept in the reserve bank. So those legislations are coming through, and a lot of them are actually seeing the difficulty of how to get their stable coin in a regulated manner. The other main development that you will see in MiCA is your virtual asset service providers, the VASP, will be converted to a CASP, a CASP. So what's the difference between a VASP and a CASP? Broadly speaking, a CASP now can actually operate in all the states within EU, as opposed to previously, a virtual asset service provider can only operate in the state that you got your VASP in. So you have a VASP in France. You cannot use that same VASP to operate, say, in Germany or in Netherlands. But now, if your VASP get upgraded to a CASP, that CASP can operate throughout Europe. So that is one of the major new legislation coming through. So you are going to see, and then a lot of things that were not so clear, you have a lot of now regulatory air cover, because a lot of clarity has come about. I mean, of course, it becomes a lot more onerous. There's a lot more compliance costs. But what is good is that there's clarity. You don't have to guess anymore how to do things and stuff like that. Right? So I think that is one of the good things about this comprehensive legislation to come about. Right? Yeah.
Yeah, I think Daniel, although he's a very senior banker, but you know he's also a regulation expert. That's the traditional world, traditional finance world. We have to deal with regulator in all aspects. And also, Daniel mentioned one point I really echoed, is that you can have a very strict regulation, but the players, traditional players, want to have clarity. Clarity is very important. No matter how strict it is, we can comply. but we need clarity. So when we talk about regulation, obviously we have Lawrence here. You are practicing in so many different locations, and obviously I can imagine you will receive a lot of inquiry from traditional financial institutions. What's the most common question that you receive, and or what's the common challenge that for a traditional financial institute to go into this Web3 space?
Thanks for the question. First of all, when we talk about the traditional money service providers, we're talking about someone that's already holding the money service licenses in their jurisdiction, right? So, and the typical ones, they are either a bank or a financial institution, which is a non-bank, right? And first of all, they have to think about their business model, what jurisdiction they're going to cover. Money service license is jurisdiction specific. So if you want to do international business, you may apply money services in your target jurisdictions. And for the nature of Web3, it's very easy for you to make international payment services. So very easy, you are going to expand to other jurisdictions. So that's something you have to think about. That's the first thing. Your current license may not be enough. The second one is what kind of service you are going to provide. You can definitely make money service, payment services, but at the same time, you can do currency conversion. Currency conversion may not be in the licensed business activity that you can do. That's the second one. And the third one, you have to think about the technology solution that you're going to have to provide the services. Some technology will involve something very interesting like stable coins, right? If you issue stable coins, you have to comply with stable coin related regulation. Some stages you may use outside exchanges to do conversions between cryptocurrencies, right? So you have to cooperate with those licensed exchanges. So those are the things important. And also you have to carefully choose your partner, very important. I did not see a license requirement or permission from the government saying that if you are providing token-related service, you need a license. But there is a trend. In the PRC, if you're doing blockchain service provision in China, you have to register yourself with the government. And for traditional banking industry, if you're providing IT service to banks, you need to meet some certain requirements. So there is a trend. So not everybody can do it. And another point that you have to think when you choose your partner, you are going to have ID guys. Normally they are with t-shirts, right? Not suit up guys. So they're very different. So, and also the traditional banking industry is heavily regulated. So they know how to do business. They are sophisticated. They take care of a lot of things. Like the travel law mentioned previously. So they have to send you the information about the transaction. They know how to do it. But you may cooperate with people who are pretty new to the business. So when you choose your partner, you'd better choose someone who have some like payment service background, although they're IT or they're tech peoples. Then I think the last but not least is you have to pay a lot of attention to your contract, because although we have more regulations coming, but remember, regulation is not everything. You sign up, you use contract for every transaction you're dealing with. So contract is for a lot of transactions is more important because there are so many, for blockchain industry, there are a vast area you don't really have specific regulation. So you heavily rely on contract to do business. So pay attention to a contract. That's my last advice.
I noticed one thing. Both of y'all mentioned travel rule. That must be a big problem that a lot of people are facing, right? And I personally think one of the reasons for that, this comes from that recommendation 16 from FATF. And one of the big problems is that, you see, traditional finance has been doing this for the longest time, right? But you see, you already have the mechanism, because you're operating in centralized environments where you can have already systems where you can actually transmit all those information that you require to meet that recommendation 16. But the problem is, blockchain was created as a decentralized ecosystem, and now you're forcing on it very traditional rules. So that's why you can see some of it. But if you think about it, right, a blockchain was not designed to transmit all this information, right? So and the whole thing about this recommendation is that you not only need to transmit, okay, so if I transmit to you, the person needs to receive, and then after that, you need to secure that data based on all those privacy requirements in each of those jurisdictions. So you have three very difficult things, and the blockchain wasn't designed to do it. So you have to create a site technology system, which FATF says, I want to remain technology agnostic. And because of that, you have so many different system providers. You have Nota Bene, you have VerifyVest, you have all those guys coming up, and therefore it's very fragmented. So I still think that if they really want to make this work, someone has to actually decide on a technology standards that can be used globally and how that information is transmitted. Because today, for example, I might be using Nota Bene, you're using VerifyVest, and it's going to be quite difficult for us to communicate. And then I will need to subscribe to the same provider as you are so that the transmission become a lot smoother. And then we have to decide also what is the exact information I need to transfer. Right? So I think it's a very good example of it's very easy for the regulators to come up with something that you must do, but then executing it in the Web3 world is actually very difficult. I mean, from the perspective and experience you had in the Web2, yes, this makes sense. So I would say travel rule completely makes sense based on the history of finance, right? But the whole problem is that I think that a lot of this legislation has not really been thought through on how can it be implemented in the most efficient manner in the Web3 world.
Yeah, I totally share this view. The longer time I stayed in this so-called Web2, Web3 merging, the more split personality I have. Totally two different worlds. That's also following a follow-up question to Suri is that banking license is by nature very localized. You have the local regulator to approve you to do anything related. But payment token especially is by default very globalized. So how do you merge these two very different concepts together?
Maybe I'll take this chance to just explain a little bit on our operating model. So while DCS is under Banking Act, we are very specifically holding the license to issue credit and charge cards. Which is why if you look at the way we look at our business, we actually treat it like a payments business, right? So I myself have over 20 years payments experience, starting from DBS, HSBC. I spent about 7 years in MasterCard, and then as well in fintechs. So personally, I've looked at the evolution of payments myself. In very simple terms, and the way I look at it, Web3 is not complex. Web3 is all about enabling payments. That's it, right? Why do we need to go into the Web2 entanglement of bank-to-bank transfers is one big question. Because today, cards is already global. So which is why you see a lot of crypto, the first landing point is not about wanting to look at bank-to-bank transfers. They all want to look at crypto cards. So cards, why it's going to be preferred, and in my opinion, Visa, MasterCard, or the payment schemes should just do a lot more, and I think that's my own personal agenda as well, having come from MasterCard. If the card schemes were to just step up today, and I don't know whether everybody here understands one of the key regulations when it comes to cards. When we as issuer of cards gets the license, you will not understand why today it's so difficult to issue a Visa card in Singapore. I want to go to Malaysia to issue Visa card as well. You cannot, because the schemes has got this rule where when you issue license, it's specific to your geography. So today, DCS can issue cards in Singapore. Today, I want to say, I want to issue cards to anybody, right? Because I have a mobile app. So can anybody just come to my app and register and then get a card? The quick answer is no, unless DCS has got the issuing license in Malaysia, Indonesia, Philippines, which makes it a very hard effort. And today, that control lies in Visa and MasterCard. So I think, number one, I think that's one, maybe one constraint or conflict that not everybody understands, right? So it's not that straightforward. So in my opinion, when you ask, as a bank, do I expect myself to get licensed everywhere? The quick answer is no, because I think we all realize banking license, number one, are not easily gotten. Then next came digital banking license, also not easy. But payments, if you look at it, has highly evolved. So the way DCS treats our digital token is not so much a stable coin. We actually treat it as a payment token. And we leverage it very highly on cards. So the way that we feel that we can accelerate into the region, today we have already built that mobile app. Today on the app, we already allow the instant redemption of DUSD or DCS token. So what really matters to us right now is to look at just purely partnerships, which is a simpler way of looking at it. Meaning today we can bring the app, and yes, if you can get a license, we get a license. Just get the lowest level license, which is a payments license, which is more than sufficient, not a banking license. Failing which, if we look across the region, because of how the industry has already accelerated, even in Europe, in many major markets, there's such a thing called payments license. It is sufficient for us to bring that same concept such that DUSD becomes interoperable across the region. So I'll give you an easy example. If today I want to go into Thailand, we will bring the DCS app, bring it into Thailand, get we call it a BIN sponsor. I don't know if everybody understands it. Purely to be able to issue a card together with us and then accept DUSD as a source of funding, the act is done. So I think for us, we are very bullish in terms of how we can, number one, increase the utility of DUSD simply by having these bilateral arrangements across the region, Southeast Asia first, by having partnerships with card issuers, which means that they have a whole payment licenses. And I think that's something that within discussions are already in place. So I think that's a very quick to market solution that we already foresee, simply because the app is already done. And we all know app operates anywhere. Whether today you're in Hong Kong, whether today you're in Malaysia, Indonesia, it does not matter. What I need to, however, make sure that you can get your DUSD in, you can get your card out. So I think that's my perspective. It's as simple as you put, right? Don't go into the banking network, go onto the cards network.
Yeah, that's a very good advice. Also, echoing Lawrence mentioned, there are different regulations in different location, jurisdiction. Do you foresee there are some emergency, or how do you think all the regulators will evolve in the future?
Yeah, there are more regulations coming. At least in Hong Kong, I see stablecoin. There is a draft version of stablecoin regulation, and in the U.S. actually, on the federal level, they have a bill on the same topic. So more regulation coming in, and also Daniel mentioned in Europe there is a new regulation coming, which is comprehensive. We welcome the regulation, but at the same time, we want to say that regulation is costly. It's pretty costly. Actually, it put a lot of cost on the industry. So when I compared the two versions of draft bill, the Hong Kong one and the US one, I noticed actually in US one there is one thing which is missing in the Hong Kong one is a stablecoin potential issuer. They have to present to the governments what benefits their stablecoin will create to this society. So that actually brings me to think when we do regulation, it's not only about how to control the risk, but also to protect the new industry and the potential benefits that the industry can offer to the society. So this really just a balance. And when we're talking about regulation, there was a sequence. In a typical common law jurisdiction, it's always like cases first, right? You have a case law, then after several years, you codify what has already been decided in cases. That's the common law jurisdiction regulation process. But in continental, like Europe, most continental countries, like PRC continental countries, they have like philosophical principles. They want to apply their philosophical principles to the things they see. So either way has their merits, but I believe, and also because of the nature of Web3 is so international, it's so liquid, and the business can travel so easily, I think you are going to see more international cooperation in terms of regulating tokens. And all cases, I mean all common law jurisdiction cases, all continental law cases can be studied, can be taken as reference. It's not like traditional PRC case cannot be taken as reference in Hong Kong, right? So there is no reference effects. But all cases, They are going to be studied by some smart regulators in the world, and then I can easily see international cooperation in this field.
Okay. Really look forward to that. Maybe somehow can address Daniel's issue about how travel rule in principle is definitely good, but how do we implement that is very diversified right now. One question to Daniel is that from the commercial perspective, because I heard a lot of traditional banks friends asking me, okay, I see Web3 payment is so hot a topic, but it is also very costly for a bank to actually start to use the token or payment token stablecoin. What's the benefit that they can get? Also, what's the benefit to the society as a whole by converting their the deposit to a tokenized deposit? How do you discuss that internally? Like, how do you make this decision to go into this space?
Okay, what he's saying is that as a bank, it can be onerous when you want to move into the Web3 space, which I think that's true, because I'll give an example to illustrate this. For example, if you are a crypto firm and you want to do some trading in a crypto asset, as long as you have enough capital, you can just buy, sell, you can leverage, so on and so forth. For a bank, for example, to keep any crypto asset on their balance sheet, on Basel's calculation, you have a huge capital charge. So the capital charge is 1,250%. So for example, if a bank wants to trade crypto and has a book of $10 million, he has to set aside $125 million for Basel capital compliance. So the capital charge becomes extremely onerous for a bank. So for a bank, a lot of times, unless you have a lot of capital, it doesn't really make sense for you to go to use your balance sheet in anything to do with crypto, to take a crypto assets onto your balance sheet, unless you have huge capital. But what a bank can do is that there's a lot of blockchain-related things that they can do. So you mentioned tokenized deposit. We did something for the N group, right? So for any conglomerates, you always have inter-company payments where you actually need to move money all across the world, and there's a lot of friction. You pay fees for every time you move money around, right? And the thing is, what you could do is once when you have tokenized that money, actually, that token represents whatever is in that deposit. You continue to enjoy the interest from the deposit, and that token can now be moved around to your subsidiary at almost zero cost if you're using your own blockchain or an enterprise blockchain. And it meets the requirement that you need to move money around each of your subsidiaries. So it is actually a lot of cost savings for internal treasury management. So this is an example of a use case. So, and then if you want to look about what will happen in the future, like for example, payments across countries, right, goes through a whole network of correspondent banks. It's very opaque, it's expensive, right? In theory, a lot of all these things can be replaced by using tokens to actually move this money. I mean, what's really stopping it is a lot of regulations around it. You cannot do third-party payment when you exit tokens and so on and so forth. So there are a lot of hindrances to do it now, but those hindrances are a lot more regulatory than technology. From a technology perspective, it's already something that's doable, right? So I would think that as regulations develop, you would be able to see more and more of this kind of use cases, right? So the ability of using tokens to replace a network of correspondent bank, for example, it makes payments and transaction banking so much more efficient. So there's a lot of all these potential use cases that you're going to see. So like you hear a lot of regulators looking into DeFi. Okay, regulators hate DeFi. That one we don't have to debate about it, right? But the fact is, they are very interested in the use of DeFi smart contracts for all this kind of usage, for risk management, for example. So like, for example, in a lot of margin calls in the traditional world, whether you're doing a margin call for commodities, for equities, for whatever trading, there's always a human element. So your client can call you and says, can you delay my margin call and stuff like that? And there's a lot of human element in that. That actually is quantified as risk for the institution. But when you use, for example, smart contract, there's no more human emotions involved. The movement of collateral, the handling of a margin call is all automated on rule-based basis. Regulators love that. So, even though they hate DeFi, they like all these elements of it, and it can be implemented for a lot of risk management, for better management of banking. So I think there is a lot of such use cases. So that's why I think as a bank, we need to be in this space because it is the future.
Very excited to hear about these live use cases. Especially, you mentioned one point, technology is moving faster than the regulation, which is very normal, very obvious. And it is at the stage that technology has moved ahead, and then regulator is also moving quite fast. I think all the country that mentioned by Lawrence is trying to legislate this regime. So my last question to all the guests is, in 3 years' time, what will be the most exciting thing that will happen you foresee in this space? Maybe Sari first.
3 years is too long, though. In my opinion, I think because we have, as a Web2 company, going into Web3, and I find that this year is going to be one of a very big year. I think the way that I look at how blockchain payments are evolving. In fact, I think where I see, and I guess maybe just a little bit of my own view, payments have actually moved, like I said, payments is just about it. It's me being able to pay Daniel, it's me being to pay Lawrence, and that's about all it actually means, right? Whether I pay you into your account or whether I pay you by tokens, at the end of the day, all that matters between two parties is that you receive your money, right? Just to make it very, very simple. So I guess coming back to the whole history of payments, really in the past, yes, it's accounts driven. And I always come back to the fact that card payments in the last 20 to 30 years has actually been moving at the speed of displacing cash, displacing bank transfers. So which is why I still feel very strongly that card payments itself as a payment rails, for the fact that it is already global, it's already 20, 30, 40 years of history, such that any rules when it comes to AML, any rules when it comes to onboarding, KYC, KYB, they are all established. So which is why I feel that in tandem, actually not so much maybe from a bank to bank, again, because although we're under Banking Act, last 50 years we have always been talking about card issuing, and we get the benefit of course, accessing the full banking network. Because the card schemes has been so established, and for the forward-looking of the Visa and MasterCard, where they're coming into crypto space, building their own blockchain connectivity, wanting to be able to manage the rails in that system, if the card schemes can come up more strongly, together with the current Web2 issuers, which are a lot more banks, I feel that that's going to make a very significant change in how fast crypto can actually advance. Because I think the banking system, that's the problem, I feel. When you go back to bank, it goes back to, I guess, 100 years of how it started, right? It is country to country, regulations by regulations, and I don't think crypto can wait that 3 years. So I think there must be a better way of looking at it, and I find that somehow cards has already transcended in that space. So that's my view. I find that in the next 2 to 3 years, Visa, MasterCard will continue to invest, and I think you'll see a lot of PR, a lot of publicity of both networks. I think what it takes is for the current partners of Visa and MasterCard like us to just put a lens of innovation, right? Not so much about a very big modification. It's just innovation of how we look at our P&L, how we look at the current regulations to just make that change. So that's my view.
Well, I think, at this point in time, most stable coins are actually being used mostly for trading purposes, right? But the real use of it, like for example, for clearing system, as a settlement coins for commodities, so it becomes 24/7 and you're not dependent on fiat cutoff timing. For use as remittances replacing correspondent bank, those are very powerful things that we are not seeing yet. And I think what we are going to see within 3 years would be bank-issued stable coins that would enable this kind of things to happen. So you will move away from trading of stable coins, just exchange use of stable coins, into other use cases as settlement. Blockchain-based exchanges in traditional asset like equity, where you use stable coins to do settlement, top-up of margins in commodities and derivative tradings using stable coins. I think those are the new developments that you'll probably see in the next 3 years.
We're running out of time, so I will be quick. I'm a huge fan of contracting, so I see the thing I want to see is the more often use of smart contract and a combination with traditional contract. And when we use like text machine to negotiate contract, you see like 20-page contract. Now you see 200-page contract, but you're going to see 1,000-page contract very soon. And some of them can be reviewed by AI lawyers. Some of them can be reviewed by human lawyers. And some part of the transaction can be done by smart contract. And some part are regulated by private contract. And more important, based on those contracts, we are going to see new regulations. That's the thing I want to see.
Wow, you are a lawyer using AI to replace other lawyers. Look forward to that.
To a certain extent, it's inevitable.
Yeah, great. Thank you very much to all the guests and all the audience. I hope we have a very good discussion and share some meaningful insights. Thank you very much. This is the end of the panel. Thank you.